The first point I would like to make is that we are living through the reset of the world economic order and the end of globalization. This is the biggest realignment in the global economic order since the early 1970s. And it's really extraordinary times, and it brings with it extraordinary challenges for investors. A lot of the territory ahead is uncharted.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. If that does not grab your attention, then I do not know what else will. In today's video, we are going to be diving into detail, showing you all that the underlying infrastructure in the digital asset and crypto ecosystem is stronger now more than it ever has been, and that now is not the time to be fearful in the digital asset landscape. We're going to be diving into some ongoing fundamental developments, specifically focusing our attention today on Hbar and Hbar. But overall, just showing you guys that right now we are seeing massive partnerships, we are seeing fundamentals, we are seeing a favorable political landscape, all of these things building momentum in the crypto landscape that have not been priced into the market yet. So I'm going to start here on today's video breakdown. By the way, if you all enjoy these types of deep dives, showing you guys documented research that all of this is taking place, backing what it is that we're saying to you guys, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support. We're going to be starting here, tapping in and listening to Signum Head of Investment Research, Caitlin T. This video only has 78 views and was streamed 7 hours ago, and over 20 people from the time of myself sharing this in the private CYPRX Discord were the first 20 people to listen to this, and still this video does not even have 100 views, which just goes to show how many people are not paying attention to the right information. So before we get into some clips that this lady, Caitlin, I don't know how to, sorry, I'm butchering her name probably, has to say, check this out. So I said to you guys as well, which are going to align with some of the fundamentals that I have to show you guys today. I said discounts are an opportunity, not a setback for the serious investor. Now more than ever, those doing research, staying disciplined, and tuning out the noise are laser focused on the bigger picture. Lock in, dial in, and build. When you step away from the hype and distractions and truly look behind the curtain, it becomes clear. The infrastructure is stronger than ever. Institutional interest is accelerating. Regulatory momentum is shifting favorably. Political support is quietly but powerfully aligning. Meanwhile, many are making decisions from a place of fear. But this is when clear and concise research matters the most. Those who understand the macro, those who position themselves strategically, will be the ones writing the success stories later on. Surround yourself with a community of forward thinkers. The future is being built now. So let me not only show you guys fundamentals from some of the world's largest organizations like the Rothschilds, which we'll get into in just 1 second, but just take a second and listen to what the Signum Head of Investment Research here has to say. I'm going to play 2 video clips back to back.
Now, where are we going from here? As highlighted by Caitlin, as long as uncertainty regarding the final outcome of the world trade order, its impacts and policy responses prevails, as long as this uncertainty prevails, market will likely remain volatile and susceptible to more drawdowns. However, there are strong indications to believe that the long-term megatrend for crypto assets remains unaffected by the current market volatility.
I wouldn't cap the upside. I would maintain exposure to the upside. I think, as we like to say it, in a liquidity-induced recovery with all the crypto fundamentals not priced in that are specific to crypto, crypto will be the fastest horse. I would not, definitely not cap or have a sort of fully market neutral position and protecting the downside. I think Fabian, to some extent, went through this before with the prevailing risks is
Wow, absolute mic drop. So we have Fabian, Chief Investment Officer at Signum, and we have Caitlin, the Head of Investment Research. Fabian went on to say that despite the current market uncertainty, the mega trend in crypto still remains intact. And then when asked the question how you would position yourself in today's market environment, Caitlin responded by saying that she would not cap the upside potential and she would remain having exposure to the upside in the crypto ecosystem. This is a long-term projection from an institution that the upside still remains intact, which is exactly what we've been attempting to show you guys here on the CYPRX platform. Now let's get into this document. So if you don't know who the Rothschilds are, again, tap in and just do your own personal research. Although most people that watch the CYPRX YouTube most likely know how deeply embedded the Rothschilds is with the global elite organizations that run this world, Rothschilds being one of them. So this is directly from the Rothschilds & Co. asset management website. This was posted on the 26th of March, 2025, which just goes to show you that this is fresh, recently updated information in the midst of the market turmoil. And look at what they are saying. Over 50% of Fortune 100 companies are executing a strategy based on blockchain. The large-scale adoption of this technology is underway and it's accelerating. Keep in mind, March 26, 2025, the market had already shed over $1 trillion. So they're literally saying this in the midst of a market meltdown. This momentum was particularly strong in 2024. Last year was indeed marked by the institutionalization of digital assets, as illustrated by the successful launch of spot Bitcoin ETFs on the US market, with notably iShares IBIT assets under management quickly exceeding its physical gold equivalent within just a few months. With over $50 billion raised by the end of 2024 in stablecoins, and essentially market infrastructure within the digital asset world reached over $33 trillion in transaction volume over the past 12 months. This is more than 2.5 times Visa transactions volume in 2024 and paves the way for large-scale asset tokenization. Keep in mind, this is literal physical proof that the infrastructure remains intact in crypto and the digital asset ecosystem. And what did I tell you guys? The infrastructure is stronger now more than ever, yet people are reacting based off of fear because of the current market conditions. If we continue to read thoroughly through this, it also talks about how the US legislative developments are setting the stage for digital asset integration into the global economy. Down here, it also mentions corporate adoption is also accelerating, led by the financial sector. Many companies have announced advancements in their digital asset strategies. Some, which had previously remained on the sidelines, now declare they are considering integrating them with corporate treasuries or developing new product and service offerings. Moreover, it talks about how the OCC confirmed in its official bulletin on March 7, 2025, that banks can effectively and legally offer digital asset custody services, leveraging distributed ledger technologies and using stablecoins. And I showed you guys this same exact post here. If we go over to the X profile, here is that Office of the Comptroller of the Currency letter, post 1183 March 2025, where I said, people are really bearish on crypto when things like this are happening. This effectively gives banks the green light to engage in crypto custody and stablecoin reserves, along with blockchain transaction verification. However, it does require that they still have regulatory oversight. But the key takeaways from this tiny bulletin is that banks can now custody crypto assets, that banks can hold reserves for stablecoins, and that banks can act as nodes and facilitate stablecoin transactions. This is a huge improvement to the previous market landscape in years before. Right now here, this is another fundamental development that just recently took place to back what it is that I'm showing you guys, that the underlying infrastructure is sound now more than ever before. This is from March 28th, 2025, directly from the FDIC website. And it says, the FDIC clarifies processes for banks to engage in crypto-related activities. Keep in mind, this is recent, right? And so all I simply did to summarize this and make this more effective and efficient for you guys to understand is I copy and pasted this in ChatGPT and asked ChatGPT a very simplistic question. After having posted this, I said, keep it simple. What does this mean for banks involved in crypto? And ChatGPT responded by saying this: banks are no longer required to ask for permission before getting into crypto if the activity is already allowed by law. They can now launch crypto-related products, they can explore blockchain-based services, and they can engage with digital assets as long as they manage risk properly. The key change from the old rule back in 2022 is that banks had to notify the FDIC before doing anything in crypto. Now, the new rule in 2025, which was just updated back in March, banks can engage in crypto without prior approval, just like any other tech company, but must handle the risks, i.e., cybersecurity, fraud, AML, and KYC. What this means: fewer roadblocks for banks equals faster adoption for crypto. It also encourages blockchain integration across financial services, but it still does require tight risk management, no free pass. That is a good thing. All in all, this aligns with the global push for digital trade and green economy frameworks. Banks are being repositioned as enablers of digital innovation and not gatekeepers, as long as they play responsibly. This is, again, huge, and just goes to prove my point that the underlying infrastructure is continuing to build and improve even in this most recent market downturn. Now, I've been an advocate of stressing the importance of paying attention to blockchain protocols or digital asset organizations or infrastructure providers in this crypto ecosystem, like Hedera, who have been doing nothing but partnering with the world's largest organizations, attending the biggest events, and building out some of the best solutions in this space. And so that is why today I'm going to focus my attention on Hedera to show you guys that they are continuing to drive momentum forward even in this market downturn, which just goes to show that this next leg up, in my personal opinion, is going to be something of scale that most people cannot even currently comprehend. This was posted just a week ago. The UK Crypto Asset Business Council says that they welcome, I'm not going to butcher this lady's name, Isadora Arredondo, the Global Policy Director at Hedera, as she joins the UK CBC Policy Council and assumes leadership of their decentralized working group. Now, if we head over here to the UK Crypto Asset Business Council website and we read their About Me page, the reason why I like seeing this on Hedera's behalf is because one of the things that they say, it says, we champion the highest level of transparency, security, and best practices along with compliance. And they drive UK-wide blockchain adoption for innovation, productivity, and transparency. And what was just announced: the Global Policy Director at Hedera just joined the UK CBC Policy Council and has assumed the leadership role of their decentralized working group. This goes to show that Hedera is at the forefront of compliance, security, and best practice in the crypto native ecosystem, right? If we come over here, showing you all another ongoing development that took place in most recent times, Sandra from the Blockchain and Digital Assets at the World Economic Forum posted this on her LinkedIn profile. They're excited to kick off the World Economic Forum's new Global Future Council on decentralized finance this week. A fantastic group of experts from businesses, public sector, civil society, academia, and international organizations that will be grappling with the challenges and opportunities that decentralized finance, i.e. DeFi, can bring to financial markets. Decentralized finance has demonstrated explosive growth, which we've told you guys in previous video breakdowns. You need to be paying attention to DeFi, underscoring the viability of DeFi as an alternative to traditional finance. This is coming directly from a World Economic Forum representative. This is huge, right? And if we scroll right down here and we click on the Global Future Council on Decentralized Finance, and we see Nilamini Rubin, Chief Policy Officer at Hedera, sits alongside other major representatives like Candace Kelly, the Chief Legal Officer at the Stellar Development Foundation, amongst many other major industry-leading experts here on this Global Future Council on Decentralized Finance. And this is just announced via a term to take place in 2025 through 2026, which yet again solidifies Hedera's role as a major market participant, setting trends, keeping up with the changing tides, making strides to be regulatory compliant while integrating digital assets, DeFi, and crypto into the traditional financial ecosystem. Last but not least, if we come over here, the Hbar Foundation posted this only just a week ago, which just goes to further show their commitment to onboard traditional financial players into not only the Hedera ecosystem, but also to bring them into the crypto native world. We're excited to announce that we have joined the ERC 3643 Association. Here, we will work with the association and its members to help scale the adoption of ERC 3643, a leading industry standard for compliant real-world asset tokenization. I believe this is now the third post from Hedera talking about compliance. The ERC-3643 token standard is an open source suite of smart contracts that enables the issuance, management, and transfer of permissioned tokens. Also known as the Token for Regulated Exchanges, or the TREX standard, ERC-3643's attention to compliance has led it to become the go-to framework for institutions with high-profile companies such as Citi, ABN AMRO, tokenizing assets such as green bonds and private equity. Keep in mind, Hbar just joined the ERC-3643 Association. Other institutions, such as the Depository Trust and Clearing Corporation, or the DTCC, have also recently joined the association to help contribute to its goals of promoting and advancing the ERC-3643 token standard. Now, by joining the association and supporting the TREX standard, we will support the growth and development of the standard through our deep experience in working with financial institutions on the Hbar Council. Last but not least, if we come over here to the ERC-3643 Association LinkedIn profile, it says, "We are excited to share that the Hong Kong Monetary Authority has highlighted the ERC-3643 for its broad adoption rate among financial institutions in their latest distributed ledger technology in the financial sector report. The report highlights the transformative potential of DLT enhancing efficiency, security, and transparency for financial institutions, reiterating the need for these institutions to adhere to established regulatory principles when advancing DLT initiatives. ERC-3643 ensures only eligible investors can access tokens while allowing on-chain ownership monitoring to ensure greater compliance." There's that word again. By integrating risk management with DLT infrastructure, we are accelerating the adoption of tokenized asset in traditional financial services. So with all of this in mind, I've now shown you guys that the underlying infrastructure is better prepared for financial institutions to come into the space now more than ever, and that now is not the time to be fearful given the current market environment that we have recently witnessed, and instead view it as an opportunity to capitalize on life-changing wealth. As soon as the market uncertainty subsides, we are set to experience a continued mass adoption of not only crypto, but of broader blockchain and distributed ledger technologies as financial institutions continue to gain interest in adopting and integrating these new technologies into their back-end core infrastructure. As always, bringing you all the realest research and information. Keep in mind that if you guys don't know where to find access to this type of information and research, we have condensed it all for you guys, and we consistently update our private community in the Discord on recent developments and fundamentals just like these ones. So make sure that you head over to CYPRXtrading.com if you want to be a part of that community. And as always, many blessings to you guys. Be cognizant, be aware, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support, and I will see you all in the next video breakdown.